In a similar vein, I'm sure you've heard rumors regarding a replacement currency for the dollar, i.e. the Amero. Do you think that this idea has any basis in fact?
Well, it has basis. None of these ideas come of their own manufacturing, but we're talking about paper replacing paper. We're talking about, if anything was to occur like that, more than unlikely at the present time or within the near or medium future. All you're doing is giving a debt instrument of a sort. The dollar is a debt instrument that pays no interest. So if you had an Amero between a narco state and the U.S. a debt state, what in the world would it accomplish? So the idea that a replacement currency, it's like saying, well, instead of putting out dollars, we're going to put out a redback with Mickey Mouse's picture on it. What's the difference? There is none. This is a down spiral going to its ultimate finish, as all down spirals do. This will end up with a commodity currency. The mode of progress is always commodity currency, debt currency, commodity currency. That's what Weimar was. From the gold mark to the Weimar it was from a supposed gold-backed currency to a no-backed currency to a real estate-backed currency.
Oh, the Rentenmark.
Right. So that's the way it always goes. All through history it goes just that way. From commodity currency to paper currency to commodity currency. Certainly not to the marriage of two paper currencies.
So, Jim, the Treasury and the Fed are traversing a tightrope here without a net. And what I'd like to know is what you view as their biggest mistake to date and what single piece of advice you would give Bernanke and Geithner here.
Biggest mistake was letting Lehman Brothers go. Okay, because that really pulled the plug on almost every derivative. By doing that, the outgoing administration maintained control over doling out money to the new administration. What do you do when those guys are running the show? You can jump up and down all you want, and it isn't going to make any difference. We're in a form of a fascist state, and you just have to realize that and paddle your way through it. But there's no use railing against what is unless you're powerful enough to change it. So let's look at saving ourselves, not the world, even though saving yourself will be saving the world. Let's not let any of our listeners become serfs. Let's advise them as best we can how to protect themselves and warn them against speculation.
Well, that brings me to the next question. Robert Reich, he insists that the green shoots economic recovery thesis is nonsense. He says there's not going to be a V-shaped recovery, no U-shaped recovery, more like a downward pointing arrow. He thinks that an economic recovery this time, Jim, may never occur at all.
Over time, eventually he'll be proved statistically correct. But your green shoots now are only deceleration of disaster. So a green shoot is, last week I lost 100,000 in Las Vegas. This week I only lost 50,000. Aren't things getting better? Okay, so the green shoots right now are purely a deceleration, which had to occur by the amount of funds that have been put into the economy. If you're going to buy people cars, car sales are going to increase. So if you run General Motors now because you're the government and you give them $4,000 or $5,000 in cash back and loyalty bonuses and multi-car bonuses and then lay another $4,500 on it by having them, bring in something that's been rusting in their friend's front yard and get $4,500, sure, you're going to bring car sales up because you bought the cars for the people. They're going to tank out on their loans, you know that, so they're going to have the cars until the repo man comes. But you brought up the figures. So that type of thing, has been called, because we always get fancy names on financial TV, whether it's a Goldilocks economy or maybe going back to the 30s when they didn't have financial TV, plateau of prosperity, or maybe recently anything negative was called the rear view mirror event. So now we got a new one called green shoots. It means nothing more than any of those other statements. This is not going to improve itself. It's going to go the other way. This is a 1932 rally. And all of what we're discussing here was what would have been discussed back then. All of the claims to deceleration of decline as indicative of an impending improvement existed back then. But it didn't prove itself correct because the debt's too high and you're not going to get a debt-burdened consumer to go back into the marketplace unless you buy him his house and buy him his car. Basically, to some degree, both of those are being done. Now, the wise car dealers are not giving the $4,500, but rather giving it as an IOU to the buyer of the vehicle if they get it back from the government. Anything that's highly complex and has the government involved is the easiest thing to rob. No offense to any of our listeners who are car dealers, but I don't think Mother Teresa ever was a car dealer. There would be an awful lot of flim-flamming going on trying to get that $4,500 from the government. I think that is really what shut it down, more than the fact that it had already been spent. Fear and realization that after 1 week week of the experience, they were being flim-flammed out of their minds because when they checked to the company's car sales and their improvement, they weren't showing it. I mean, honestly, stealing the money. And the more complex, like Medicare, the easier it is to steal from.
The more bureaucrats there are in the mix,
the easier it is to steal from when it has to do with the government. If you're going to flim-flam the government, don't do it on something as simple as 1, 2, 3. It's got to look like the diagram of the new Medicare bill. That thing's going to get ripped off like nobody's going to get any medicine, but there's going to be a lot of rich people around.
You know, Jim, before we wrap up, I know listeners would like to hear the Gold King's gut feeling on this market here. Do you think we're going to have to wait till 2010 for a breakout, or do you think a Mongol horde charge over this Great Wall of China could come sooner?
No, it's coming very soon. It's all the dollar. And you know, anytime you see the dollar, like you see the gold market at plus 60, and then the gold banks take it down into the 55 area, and you look at the dollar and it's just chugging down, don't worry about it. The gold price coming back. Really what you want to look at is the dollar. You've got a 72 number on it right now. Whether 76 holds or not on the USDX is totally irrelevant. Off 72, which was the low point, you'll probably get another rally, take us in, but it's going to go down to 62, sure as I'm talking to you. And it could even go lower. The dollar is in serious trouble. All of the manipulation or management of prospective economics, which is really an economic thesis fully believed by the Wall Street types, meaning that there is no economic law, all there is markets. And markets will change the perception of the individual and therefore controls the economy. That was okay until we all started going broke. Okay, now it doesn't work anymore. And they believe it completely. I mean, all of your media, all of your statements by government, everything is management of prospective economics. And it's a school. It's a theory, just as the same as a monetary school. The theories that have come out of the unseen hand through von Mises, Austrian school, these are all beliefs. Well, MOPE is what's making it happen now. Management of prospective economics. Greenspan told you that in public when he talked about market perspective having economic implication. Gold is going to 1650, and there's not a force on earth that's going to stop it.
I think you're right. And you think the first stop is that $1,250, $1,300 area?
Yes, definitely. Definitely, yes. 1224 up, you'd be very careful. But, you know, the truth is, do you really want to trade this thing? Or do you just want to understand that you're investing in insurance? And it's the only thing out there that can protect you against powerful people doing wrong things. You can't go out and make an administration change its mind or go back and cure what 10 administrations have done. Goldman is just too big and too powerful. There's no taking Goldman out. So what can you do? Protect yourself. What's gold? It's insurance. Do you really want to be a trader? I mean, if you feel like that, trade Google or oil. But don't trade gold. Gold you buy in coin form. You know, you keep it in your Mayo jar, and that's insurance.
One of the things that we get at the JS Mindset website are your fundamental underpinnings of the gold bull market. Could you give us a quick overview?
Well, the fundamental underpinning is extreme expansion in debt. The extreme level still of over-the-counter derivatives outstanding. The continued growth of over-the-counter derivatives now in the flavor of the month, which is your credit default derivative. The fact that these things are being issued naked. The fact that instrument may work from Tuesday to Wednesday or from July to August, but it can't work the day that the credit which has been insured fails. We are having an increasing amount of debt failure. We are having states with increasing deficits that will move from state to state, as sure as I'm sitting here talking to you. And this is a spiral event that was predicted by a formula. And that formula or spiral event will continue to go tighter, lower, and faster towards bankruptcy unless there's intervention directly involved in the problem that caused it in the first place. And there isn't a chance of that because the problem is over-the-counter derivatives. That's the way we see it. That's why I'm 100% involved in gold, and I intend to stay just that way. If I needed to sell any gold, it would only be for expense.